It is June 23rd. I am your host, The Cowboy. This is Elliott Wave Cafe and Charts of the Day. Let's get started, guys. All right, so I wanted to take you first through some of the things that kind of happened today. We had a pretty interesting mixed day with a little bit of a bullish tone. This was another day of testimony from Jay Powell, and a lot of questions, obviously, regarding the inflation, regarding economic growth, if you haven't noticed, here in the markets, we're starting to shift a little bit into a narrative of the Fed probably moving a little bit too aggressive. You can notice this in the price of bonds. They're starting to push a little bit higher, yields coming lower. We notice this in the risk on that the market is starting to seem to be taking underneath the surface. There are things that are moving with a positive tilt in here. So we might be getting a few little hints in here of the Fed possibly trying to shift their narrative, being forced by the slowdown in the economic growth. Today's manufacturing index came very, very low. The talks of recession are continuing to increase in here. And I think the Fed is getting caught wrong-footed by being a little bit too aggressive. So expect a shifting in the narrative moving forward. This should bond well for the risk assets overall. I've done about an hour and a half live stream this morning with the members. We've gone through all these scenarios, and we've discussed, the kind of the best places to be and how we're approaching kind of the markets moving forward into the summer. We took a look at cryptos as well. So I'm going to run you here through kind of what happened today. You can see in the NASDAQ, we were up kind of the strongest ones, so the tech sector and the 100 stocks here, about 1.6%, the strongest of them all. You can see here small caps, about 84 basis points. VIX was kind of flat, did not sell off too much, but it was not aggressive either. So a pretty bullish day overall in the markets. Yields sold off. This is helping, these indices back in here, especially NASDAQ. And you can see the market starting to buy bonds. And if the yields are coming lower, that means that the market is possibly starting to price in economic weakness. And that's why I keep saying, watch the bond market, because that's going to be the first place where you will see, a shift in the market structure as this traders will position here ahead of further, pausing or even easing by the Fed moving into who knows, the end of this year, hard to believe, maybe next year. Commodities have been coming down a lot. I've been beating the drum in short commodities here for a long time. And, they're being kind of taken down aggressively. You look at natural gas just today, 8%. Oil continues to drop. Copper was a big drop today, almost 5% at some point. The commodities index overall, DBC, the ETF, down 2.2%. Corn was a trade that we've, closed off this morning as well, right before the stream up here, down 5%. I've been talking about the short in agriculture commodities in here, and these right here are telling you that the market is putting its brake on inflation. So very interesting to see. Then you had a little bit of a rally in the crypto assets, with Bitcoin, up about 5%, at least at the time of the close of the markets today. So, decent moves out of here, which means that the market is slowly shifting into a risk on mode. We'll see if it's going to be sustained, but that's something that this is kind of signaling. Commodities lower, cryptocurrencies higher, NASDAQ and, NASDAQ 100, NASDAQ composite higher, yields lower. Right, this is all a little bit of a shift in what we've had so far, which was a lot of energy, a lot of defense, everything, the yields were moving higher and everything else is kind of turning a little bit here. So it's interesting to see in terms of the performance today, in terms of the sectors, we've got real estate, healthcare, utilities, so still some defensive sectors, but a big drop in energy and materials and industrials in here, technology and financials. I would like financials to start moving higher, but that's an issue a little bit of there with the yield curve. So let me take you to the counts in here, and you already know these. This is more of a bullish perspective where we're looking at the S&P 500 for a second wave, then another wave 1 and a wave 2 in progress, followed by a next bull phase of the market in here, possibly from the middle of this trend line, maybe a little bit of a rally, come back, that's the bottom of the trend line, maybe towards the end of the year, maybe into the middle of the next year, maybe we're still going to be in some kind of a large sideways consolidation or even more of a, let's say, a cyclical bear market. But then, we can start a much larger advance to the upside. So this is the bullish count through a 1-2 from the current levels. I have an alternate that says that this is a fourth wave, right? That's a fifth, and you're beginning a much larger decline in the market. The problem we have is that this move from the highs to the lows is highly corrective, and you can see this back in here. I'm counting it for right now as a double zigzag to an ABC X ABC, and starting to look for signs that if the market starts to recover back towards this channel above this B wave, 41.77 is the level that I'm watching, to begin to confirm the fact that this was indeed a double zigzag in here, and the markets start to rally to the next leg higher. But so far it's just a little bit of a move. I want to see more of an impulsive structure from these levels. We're trading this with the bullish tone in the, I've opened position in NDX, I've opened position in S&P 500, I've taken some profits, reinitiate again. So I'm trying to ride an impulsive wave higher, because the sell-off in here was super aggressive. A lot of indicators were just kind of screaming exhaustion and capitulation. So we could be that we could be turning from here. Now I know we've had a few sell-offs already, right? But I think we were pretty good at kind of identifying some of these turning points, even though we didn't get much of a rally moving forward. So that's why it's important that we try to take some of these lower highs in here and stop making lower lows. Here is a look at the NASDAQ. So similar structure, wave 1, wave 2 to an ABC, another 1, another 2. Now this one, in the smaller channel, I have a big channel in here, but in the smaller one, we're towards the bottom of the channel. The drop in the NASDAQ 100 was a little bit bigger than in the S&P 500. I think we went below 30% in terms of the retracement in here, so it looks pretty good, and we're starting to show signs of recovery in here as well. Here is how it looks on the lower degree count to an ABC, a next to the prior B wave, an A, B, and then down in C. This is a 5-wave move that I can count it complete, and I think we're starting to show signs of recovery in here from the bottom of this channel. So it's a kind of a bold call, I agree, but I like the structure. I like kind of how it unfolded. All I need to see a little bit more confirmation from price, so we can kind of start pounding it to the upside. Now here is a quick look at what's going on at the core markets. This is kind of what I watch every single day with the members and in the videos, and just kind of keep an eye on where things are. The dollar is still the strongest in here, you can see, but it is diverging. I mean, you can see this is placed in the order, in the descending order of the RSI strength. You're making a higher high in the dollar. The RSI is not. It's starting to show signs of cracking. It's been showing signs of cracking to this first decline. And if the commodities complex continue to come down and the inflation comes down, I think that the dollar will start to weaken in here, as it's been more of a safety play for the past, since the beginning of the year mostly. Then you have TLT, which has the 20+ year bonds in here that are starting to crack back above their 20-day moving average, approaching 50. That's going to be a good signal if we're climbing back above there, that the bonds are going to start to get bought, yields are going to come lower. So this is a market that I'm definitely watching. Gold is doing nothing. QQQ in here, it's just kind of starting to push back. And then you could notice towards the end in here, all right, DBA is the agriculture ETF. That's been just kind of destroyed for the past couple of days in here. Again, short corn, short wheat. You know, a lot of these markets have been taken down, and we've shorted into this swing high based on, you know, just a pretty simple, beautiful pattern that the market kind of gave. I mean, a pretty clean, I would call it, in either head and shoulder or a kind of rolling formation in here, and it was a pretty easy trade to take. This is oil back in here. You can see we're approaching back to 100. We have taken shorts in oil as well. You know, the commodity, the DBC is the one that I've been talking about, and I presented in YouTube, you know, the reasons why this one is probably in a final move higher followed by a correction lower. So these are things that we're watching. Here is DBE. This is the energy. DBC has a lot of energy, about 60%, but there's a lot of metals in there as well. And you know, this is only agriculture. This is only energy in here. And a lot of these stocks like Oxy, Divan Energy, you know, a lot of these stocks have been taken down, and we're talking about this for a while because those were not looking good. That market looked very, very frothy, and a lot of new traders just kind of got caught into these, you know, into these trends exactly at the wrong time. So here we are, kind of reversing out of that story. Who knows if they're going to come back? You know, I doubt it. If inflation continues to, you know, to show signs in here of signs of stabilizing and possibly coming lower, we're not going to get the data until in about 3 weeks. So, you know, we'll definitely watch that. But I think the markets are sniffing that out. The next one in here, I wanted to show you just a little bit of what's going on into some of these correlations. So Bitcoin in blue, S&P 500 in green, copper here in this, you know, orangey color, right, as copper is. And then this is the 10-year yields. Now, these markets I was talking about as they were climbing higher as being very correlated in terms of kind of where the risk goes. And, you know, Bitcoin and the S&P 500 sold a little bit lower. Copper did move higher in here along with the S&P. Bitcoin never confirmed this, so the markets crashed lower, you know, cleaning up the froth in the crypto market. Here it is copper following to the downside. When copper does this, right, I can tell you that the fears of recession in the United States are getting increasingly strong, right, by, you know, as each day kind of passes in here. And I think next month we're going to get the GDP data for this quarter that finishes up at the end of this month. And that's going to be an interesting one to see, might be even negative. So we have to definitely watch for that. But these are the 10-year yields in here that haven't sold off yet, which means that this market is probably going to be next kind of coming to the downside. So I'm watching this, and then we'll watch for signs of recovery from Bitcoin and the S&P 500. I'm not sure what's going to happen with copper here. Maybe you know, it's going to stabilize for a while. But if you watch the gold copper ratio, which I've talked about, that's the one that you can hear a lot of, you know, pundits talking as well. It is the one that trends kind of shows you that you know, people prefer a little bit more safety now, selling copper and buying gold. So take that in. Here is a little bit of the performance on, and I wanted to kind of point this out on the performance of the S&P 500 sectors, the 11 sectors. Performance here year to date, where the XLE was the best performer up until, I don't know, middle of June. So not that long ago. I mean, you know, right beginning of June, right in there. And here we are, you know, 10 days later with the XLE getting, you know, up 70%, almost 70%, and now you're up 30%. So still up on the year, the best performing sector so far, but with a big move of those highs, and it does look impulsive. It's not a corrective move. So even if we're going to rally, I think that this one, it's going to be in my shorting list moving forward. We were, you know, one of the first here that we've been talking about, you know, buying puts in XLE, and I, you know, talked to my members about this as well. I'm like, you know, puts in XLE, because this market is frothy. It's an ending diagonal in oil, and this thing is going to crash lower. So, but here is what's interesting. So this is year to date XLE, and then you can see, you know, XLY and XLC and XLK still low, right? The lowest year to date in here. But here's what's going on. If you're getting closer, let's say 1 month to 2 months, looking back, you're starting to see that they're picking up steam a little bit of a faster rate than these other ones are. And here is that chart. You can see how the XLY, starting to shift higher. You can see how energy now, right, for the past month here is down 12%, materials, and I'm looking for the communication sector. I'm looking for even the S&P 500, maybe some healthcare, XLK up here, right, down only 145. So you can see underneath the surface how some of these sectors are starting to improve, and the money is starting to flow into, because if you're getting into a recession, the markets are forward looking. I talked about this the other day as well, or on the macro video on Saturday. Markets are forward looking, and they will start to price in, rate cuts and stimulus and stuff like that, and they're going to expect the money are going to flow into these sectors. So I know that sounds, quite weird and quite, unbelievable to think about it at the moment, right? You would think, oh, it's a recession, sell everything. I don't think so. I think that the markets have already priced in with this big sell-off that maybe we've had so far, that things are going to look quite nasty. Big deleveraging, everything kind of got thrown out. Maybe we're going to go to a recession, but the markets, by the time we get out of the recession, the markets are already going to be much, much higher. So that's kind of what's going on in here, and that's kind of what I'm watching. Here is a look at, I'm watching a lot of ETFs. I think I've got, 200 or something, maybe even more than that. And, I try to scan them based on their RSI and kind of what looks interesting, what kind of shifts back and forth. And I was talking to the members as well about the China ETF. So China has been doing pretty well here for the past couple of months, and it was the first one that got kicked in the teeth and sold off, right, along with the ARK sector, with the ARK ETF and all those crazy stocks in there. And these are the ones that are starting to recover. So if you can see in here, a bunch of this is China. KURE, CHIQ, ASHR, then you have KWAB, right, the internet, and MCHI, and so all of these, pick them, but you can see they're climbing back above their 50-day moving average, which means that the trend is starting to shift a little bit to the upside. Now, they're still below the 200, right? It's still not super, super positive, but there is a sign here. Look at biotech. Through a little bit of a double bottom in here, trying to kind of get back to the up. This has been a sector that's been destroyed as well. So, something to watch in here. FXI, if you want to take, one of the largest ETFs there. Dollar, like I talked about, then look at genomic here. ARKG, ARKK in here. You got some emerging markets starting to push higher. You got some solar stocks. You got some lithium. So things are starting to get some clean energy. So things are starting to, shift over from, all this energy and all this coal and everything back towards risk. And this is what this picture kind of shows you. So making sense of all of this is important, because it can prepare you in, kind of to be ahead of the market and start to kind of shift assets to be on the right side, and to start to be a little bit more early to be able to enjoy gains moving forward. So this is just a narrative that's happening right now. I'm just kind of presenting this to you. So do with this information what you may, but I'm telling you kind of what I'm seeing, what I'm watching, what I'm doing, how I'm trading into my own accounts. And take a look at the cryptos. I'm scanning every single day for who's strong, who's weak. And these are basically some of the coins that have climbed above their 20-day moving average. And you can see in here, you have Atom, which is, starting to pick up a little bit of strength. EGLD in here, Helium, Litecoin, Matic, Solana, Uniswap, and Waves are some of the ones that are showing, strength here as they're trying to find some lows. Now, the crypto market has been destroyed. It needs a lot of time to kind of recover, maybe create a base, but that's how it starts. And these are some of the strongest ones that are displaying signs of recovering. So if you wanted to go fishing, these could be some of the ones that could be looking interesting. Helium in here is trying to get above the 50, but we don't have that many. I think it's just that one, and maybe Uniswap in here as well. So, if the risk picks up in the rest of the market, I think it's going to transfer also into the cryptos. But, let's just be very, very careful of possible one more low. I'm not ruling that out, but it's interesting what I'm seeing. And then also, I continue to kind of beat the drum in here. I love this reaction on the daily time frames, on the candlestick reading. It's one of my favorite things to do, to just kind of read candlesticks and formations, and kind of where the bulls are, what the bears are doing, where we have rejections, hammer, shooting star, things like that, that can tell me that, things might change. So here we are with the low at 17,622. A nice bullish reversal out of here. The market still needs to prove itself, right? But as long as these lows are not getting challenged, this becomes a very strong indicator that possibly we might have a big low in place in Bitcoin. So, it's something that it is on the chart, right? It's what you see versus what you think. So you can continue to think that the market could trend lower, but what I see on the chart is I see a big rejection on this kind of daily time frames that tells me that they've stepped in here. This is on the daily time frames. Now we got to get back above some of these averages, right? Like the 20, the 50, and so on. And that might take some time. But we are long in the room as well. And I'm looking for initial targets maybe towards 24, 25, through a 5-wave advance. And, that's all I'm going to say about the Bitcoin for right now. I'll leave the counts for the room. But this is an interesting look, definitely. And then the last piece of information I have here. Hey, guys, listen. Check out this Substack that I have. I mean, this is a little piece that just kind of talks a little bit about, about being a trader, about, looking at different markets, taking advantage of your skills as a detective, as a person that looks at the market and try to extract, quality trade setups out of the market. They are very complex. There's a lot of them, right? Like I showed you, from equities to Forex to cryptos to commodities, everything under the sun there, by using Elliott Wave, by using, a little bit of intuition and a little bit of macro analysis overall, you can get on the right side of the market. And that's what this article is about. That's why a detective does in the market. It goes in, creates a narrative, tries to look at everything that's available to him, and then picks certain instruments and certain way to trade them via options, via futures, via stock, whatever it's available out there that can, extract the best alpha out of those trades. And that's what this is about. So go ahead and subscribe. This is a free newsletter. I'm trying to write it every week, and I have some ideas for some futures ones as well, but give it a try, subscribe, and I'll see you up there. Anyway, thank you for watching, guys. Hey, if you don't mind, just subscribe and like. It's probably not that hard, and I'll see you a little bit later. Leave some comments. Bye.